We're live. Okay. Sorry for the delay, everyone. I had some technical difficulties. I was running late. Had a family, a friend passed away. It's been a sad week. Had a funeral today, so running today. We're back. My apologies for running late. So, anyways, thank you for joining us on this live. My name is Adam Levine. I'm a private lender for been private lending for over a decade. We are also Gator lenders, thanks to Pace Morby. I'm a member, a sub two student myself, also a member of the Gator community. And thank you, Pace, because I've learned so much from you. This Gator method it's terrific. It's really a game changer, and I'm incorporating it into our private lending business. And blend. So this is how um and I remember we spoke about getting what is it, a business credit, right? So that's very, very interesting. And so what I'm doing now is keep in mind this is going to be just a high level view of what's to come. And the topic is unlocking 100% financing for your fix and flip projects with gator gapping, right? And gator gapping is something that I I took, and what I mean is not every gator is equal, right? So what I mean by that is not every gator understands all the nuances of this business. They don't have all the resources, the know-how, maybe the capital, so what I want to do is I want to add more value, okay? And instead of just sending, so what I want to do is I want to help investors achieve 100% financing by blending multiple buckets of capital. Institutional capital, it could be private capital, it could be private capital consists of, like, it could be like someone like myself, a gator lender, right? Um, your friends, family, whatever, right? That's the private capital. And then another big thing that most investors that I highly recommend, because I've seen this happen multiple times, is stop using your personal credit cards to fund flips. Stop doing that, because going to your credit's going to get whacked, because you're gonna go above that 30% utilization rate, and now your goal is to buy, renovate, refinance, repeat, and you can't, because your credit is now uh, mid sixes, and you can't qualify for a DSCR loan to refi to pay the lender back. Um, so a smarter approach is to be able to leverage all these resources. And what I want to do different than what some other lenders are doing is I don't want to refer you to a um, a business broker, or a broker that helps you find a bank and they'll do everything for you and then charge you 10% from that's what I hear to go and rate is, and then they're chasing you down for money. I don't really it's easier, right? For me or for you, maybe, but it's not giving you the skills to go find the money yourself. So now you're gonna keep on paying that, right? So what I want to do is I formed a partnership with Business Credit Workshop, Joe Lawrence. We did um the live last week. It was a hit. I suggest going back to last week, watch that live. Watch it, because you could follow that live step by step and go apply for a business credit card, or even go try to apply for a business line credit, because he actually gives you the steps and gives you banks to go to. Sorry, my dog's barking. Sorry about that. It's a mini golden doodle. I'm doing this live from home. Today I should be at the office, but it's been a weird day, like I said, with the funeral. But anyway, so what I envision is that I want to give everybody the tools and teach you how, not teach you. I want you to leverage uh, Business Credit Workshop, leverage their resources. They'll teach you how to build your credit, how to build everything up. Plus, they have a whole community. They'll help teach you how to build it so you can get unlimited amounts of money, of unsecured business lines of credit and business credit cards. Okay. But the key is now that let's say you have the Gator, you have that Gator lender, that's your gap lender. And keep in mind, Levine Capital, we fund our own. Most of the time, we've been funding everything ourselves in-house. We've brought other Gators into some deals. And we're going to start doing that more because there's a lot of, we see value in helping other Gators get into deals that are already been underwritten by a lender, and they're basically they're ready to go. We vetted, they've been through the whole process with us. And plus, we're mitigating risk for them because we see everything and draws and interest payments, everything. So, but going back, so now you need financial management. You need to understand how to blend all this capital, right? And that's what I want to show you. I want to show you not only can you achieve, I mean, this 100% financing is, it's been around for a while, meaning me as lending, for example, we have lots of clients that come to us that already have a private lender. They already have business credit cards or unsecured lines of credit, right? And it's pretty amazing. And they're scaling up. They're doing many, many deals. So what I want to do is I want to help manage everything and how to be financially responsible so you're not going to put yourself in harm's way. And for example, we're not going to recommend you to go start funding your rehab with your personal credit card, because going back to what I said before, that could hurt your credit. So maybe it's okay for now, but if your goal is to refinance after it's renovated to a DSCR loan, that is not a good idea. The good news is if you have it on business credit or business credit cards, it doesn't, from what I understand, it doesn't show up on your credit report. Okay. And Joe Lawrence mentions that in here. So that's really what I want to do. And if you see this, right, the reason why I have this on the screen, because I want to talk about the Gator gapping. Now, going back to that, it's something that I don't know if anybody ever used that before. Gator method, Gator lending. I'm calling Gator gapping. Why am I calling it that? Because we're filling in all the gaps. But not only are we filling in all the gaps with Gator gapping, but we're also helping you. We're giving you resources, right? We're giving you access to Joe Lawrence, right? We're working together to help your financial plan, right? And you don't have to use all the buckets of capital, such as the Gator. Maybe all you need is the institutional and the business line of credit. That's all you need. And you know what? You're probably better off that way because the Gator's going to be more expensive, right? That money is usually short term, and it's they want a higher yield on their capital they put to work. So what we're doing is we want to be a one-stop shop where you come to us, you could have the confidence that we understand the business, we understand everything, we have the resources, and we can help you scale. Okay. And we want to bring on guests onto this show that can, real life people, like, because like I don't want to give you just examples that are just pulled from air. I want to actually give you real life scenarios of what's going on, and we're going to show you real life scenarios of what we've done with blending the two of private and institutional capital. Lines of credit. What's interesting is I have clients that I discovered later on that they've been using credit cards or whatnot. And what's really cool is to keep in mind when if you get a business credit card, right, you could actually turn that to cash. And you could find a 0% APR credit card and turn it to cash through Plastics or another company. And if you watch the video, Joe actually shows you he said he was able to ACH money to a title company using his credit card. Like I heard of this, but I didn't understand, and now I get it. Like I'm like, because use that company Plastic, like that is unbelievable. That is awesome. So that's really what we're doing. Gator gapping is something that I thought of the other day. It's a catch to me. It's pretty catchy. It's basically not every lender is created equal. And I feel that we are um, the appropriate lender for you, meaning we understand institutional capital, been doing it for quite some time. Private capital, been doing it for quite some time. Gatoring, been part of Gator for, I don't know, about a year. So I understand that pretty well and have lots of resources there. And the business lines of credit, we have Joe Lawrence Business Credit Workshop. And with this, you're going to be able to scale tremendously. And that's what I want to help you do. And that's what this whole live is about. It's going to be a series. And we want to really, and also what's really cool is you'll be able to, let's say you have a deal. Maybe you could talk with us. And do we have anybody on here? You could share your deal on here. For example, I would say, you know what? I'm going to give you this in the chat. Why don't you submit your deal right now? Right? Sometimes it's hard. Like I could tell you, I could, this is the link to submit a deal. I don't know if you see my screen, but I'll put it in the chat. This is the link right here. So I can share my screen with you. So, I mean, that's really what I want to be talking about this upcoming few weeks is because I find it fascinating. And keep in mind, like, why do you want to do this rather than working with a broker that's going to help you find the money? Because number one, to me, it's definitely a lot more expensive. They're charging you 10%. You get 100 grand. Now they're going to be chasing you down for 10 grand. And then you got to keep on going back. It can get expensive. What we want to do is we want to give you the resources so you could go find that bank, find that backyard bank, build that relationship, right? And then go apply for that business credit, go apply for that unsecured line of credit, right? And then you could work with us. Let's say you have a deal. We could help you with the financial management. Like, okay, you have that credit card. All right, use that to buy materials. Use that to do this, this, and this. Okay, now you have your unsecured line of credit. You could do this. Maybe take a portion of this, use it for reserves, use it for this, and we'll help you with that. Okay. Anybody have questions? Because I know this is a lot that we're going over, but I want to, let me see. Anybody have questions? All right. So, and keep in mind, so there's a free ebook right here that I would suggest getting. It's right here. Let me see. Right here. Actually, I don't even think I was sharing my screen. I was not sharing my screen. So let me show you my screen, what I was looking at right now. Okay. So gator gapping, right? Unlocking 100% financing for your fixable project. This is a little blog post we did, right? And this is something that we put together. And right here, you can actually, we recommend starting with this guide right here and grab this free ebook right here. Actually, you can't see my screen, but you can't see it. My apologies. Give me a second. I'll show you what I'm looking at right now. Oh, what's the minimum FICO score you want to see? For what type of loan? For Anthony, what type of loan are you referring to? So I would say fix and flip. 6, I mean, it really depends. Like, for example, we had clients that were experienced and we funded 600 credit score. A beginner, that's going to be challenging. Fix and flip, bridge, right? But I would say you really want to be around 680, but we can go lower than that. I mean, there's compensating factors. Oh, yeah, new construction. Yeah, I would say we could start at like 620, I would say, but we really want to see 680. However, compensating factors, if you're like a 620, is interest reserves. You got to put up like maybe a few months of interest reserves or maybe 3 to 6 months of interest reserves. That's for fix and flip and ground construction. for example, I had a friend of mine. We lent money multiple times. Actually, we've given him 100% financing with gap funding and the blend of institutional and private. His credit, I don't, not naming names, but his credit was definitely not where we wanted to see it. But the compensating factor was he had lots of experience, so we made it work. And also we put up, I believe it was like 9 months of interest reserves. So, but really, you want to be around 680 to get the better, where you're not gonna have to put up maybe 1 month of IR or interest reserves, right? Keep in mind, I know you mentioned fix and flip and new construction. DSCR is tricky. You want to be around, you want to be in the high sevens. Can you get in with a 660? With a 660, you could, but your leverage and your rates you're not gonna like them. And so that's like the one thing. Keep in mind that one little tidbit that if you watch the other episode that Joe mentioned, which I think is brilliant, is that if you're using your personal credit cards, it's easy to get approved for a business credit card. I don't know what the credit score that you need for that. I don't know, but we could always find out. If I had Joe on here, I'm sure he could spit it out really quick. But what he did was he transferred his because he was at like he said, like, I think the above his 30% utilization, his credit was getting whacked, right? And he's using it to fund his rehabs. So he transferred his balances on his personal credit card to his business credit. And then all of a sudden his credit score skyrocketed. And so that's what, like, these are things that you could be doing. And we want to help clients grow. And what I see is, like, can you grow with the Gator stuff? You could, but in my opinion, it's expensive. And if you could get an unsecured business line of credit, it's like maybe prime plus, I don't know, a few 100 basis points, maybe at 10%. I'm making these numbers up right now. This is what I believe, what I heard before. That's a lot cheaper than some Gator lender that wants to take like a chunkier deal with a 6-month term max. When I say a chunkier deal, they want to make like, I've heard 20% on their money, 30% on their money. It could be more, right? Now, the deal has to warrant that. Meaning, like, the deal has to have enough profit in it to be able to pay that. So that's why, like, not every deal is going to fit, right? So, but I want to save this for others. Anthony, this is a good question. Do you have any other questions? Whoa, that was weird. The house just shook. I hope that's not another earthquake or wind. The house just shook for a second. I know there's been earthquakes going on. Oh, thank you so much, Anthony. Thank you. Yeah. Sorry about that. Yeah, that was yeah, I learned a lot from that episode. Actually, I rewatched that episode multiple times, and my wife did too. And I've been sharing with people because it is gold. It is absolutely gold. And I'm in the process of buying a house right now. We're gonna be closing next month. So I'm not doing anything. But as soon as I close, I'm closing down some LLCs, but I have many LLCs. And I want to start building business credit in all of them. And I have a bunch that are like over 2 years old. Actually, I may sell. I mean, if someone wants to buy one of them, I'll sell it. Because I'm just going to close them down. The reason why I want to close them down because they're not cheap to hold. Every year I got to pay a tax return on an LLC that's not doing anything. I'm like, this is a waste of money. I got to shut it down. But then I have some other ones that I want that they're not doing anything, but I'm going to keep them. They're over 2 years old. And they're with Wells Fargo. And you know what's interesting? If you're looking for a business line of credit, check Wells Fargo, because I got one from Wells Fargo actually. And it was very easy to get approved. No, yeah, I agree with you. To me, I'd rather I how do I explain it? Having equity partners there's uncertainty. You don't know if the money's going to be there. I've had a client call me up today. He had a partner that was supposed to fund the deal today, and they didn't have the money. I don't know. They backed out of the deal. Now they're coming to me because they need to close next week. And that's the problem. I mean, it happens multiple times where they thought they had this private money partner or private money lender, and then all of a sudden the money's not there. Why is the money not there? Maybe they did another deal, right? So having the lines of credit, right, or credit cards, like for example, let's say you need to put up an earnest money deposit, right? You can use it for that. Why tie up your own money? Use use the line of credit. You can even use the credit card if you have to. Go to plastics and use that. The ACH money right to escrow. So that's, to me, is very interesting, and it's something that Pace Morby was teaching us skaters was, look, don't use your own money. Get a business, build business credit, and use that. So that to me is ingenious. I really think that's definitely something that I find very interesting. So anyway, so what I wanted to show you guys. Oh wow, you lost 200,000 in assignment on LA wholesale deals because your partner didn't like splitting fees and tried to see on the deals. Well, what happened though? Oh, guys, you probably don't see this. Let me put them on the. So Anthony said he lost. We're talking about relying on partners, and partners' money may not be there when you need it. So by having access to credit, right? And that's what I learned growing up. Like, credit is everything. If I had to choose having cash, I mean, obviously, if you have like millions and millions of dollars, like I know people that like I don't care, I just buy everything cash. But um, but in my opinion, like I think credit is more valuable because it's like credit's everything. It's like, well, how many houses can you buy cash? I mean, look, everybody, there's exceptions for people. Um, what is this? Let me put you in that. He was responsible for the EMD. So how'd you lose the 200,000 though? And then so I mean, this is, look, another thing too is partnerships could fall out. I mean, I've been in partnerships and you just get very disappointed. They don't work out. A partnership is like a marriage. And when I don't know what happened with your deal, Anthony, but from usually when there's a lot of money involved, people change. That's what I noticed from experience. And people get greedy. I'm not saying everybody's like that, but it happens, right? And it's natural. Oh, you wouldn't do the walkthroughs. Wait. He had to walk away from the deals because he wouldn't do the walkthroughs. We definitely should talk later on because seems like this is not a it seems like this is not a there's a lot that happened here in your scenario. So, but I definitely I mean, look, we fund EMD loans, and that's something that for example, if you're a wholesaler, right? Oh, I see. So you didn't really lose money or your principal. You lost the opportunity to make money on that deal because your partner wouldn't do the walkthrough. The broker went to the next buyer. Okay, so you lost the opportunity to make money. You didn't actually lose your own dollars. You just lost the deal, which had that profit potential in there, if I'm not mistaken. But it sounds like, yeah, okay. Yeah, I mean, look, there's no guaranteed profit. I can give you a story. Bought a deal in Pensacola. Appraisal said it was worth 550. That's all good. It's all good. So this is, I mean, I'm getting off topic, but I bought a property in Pensacola. Make a long story short, how did it come to me? Wholesaler was supposed to flip it to another buyer. Buyer came to me for a loan. Problem was he couldn't close. And there was a lot of other things going on, but I had the appraisal and I'm like, and the problem was the buyer was not experienced. And it was really interesting. Another wholesaler called me, and this buyer basically, he borrowed someone's EMD money to go buy another deal. He doctored my proof of funds and for another property that I had no idea about. Wholesaler calls me, he's like, Adam, like, I got like whatever. And I'm like, I know nothing about this deal. And then he told me about this is the name, blah, 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 blah. He's like, I'm keeping the EMD. And I'm like, oh. And so let me step back. So this deal that I got, that was that same guy that borrowed the EMD and he doctored my proof of funds to try to buy a deal. And then I was hearing stories from other people about watch out for him and this and that. He's doing really not a ideal borrower, let's put it that way, or partner or anything. But we approved him for the loan. Problem was he didn't have the cash to close, right? And I was not going to gap fund them. Was not interested. Would I've done it? Possibly, but there was too many red flags that kind of I didn't want to do it, right? But it looked like a good deal on paper. So I have this appraisal for $550,000. We had, I think, we thought we had maybe a few hundred thousand. Maybe what was it? A few hundred. I think like 150,000, actually, something like that. I thought, right? Wholesaler's like, what do you like? Do you want the deal? Because I'm gonna have to pass it to someone else. I'm like, all right, I'll buy it. So I bought it. We bought it cash, closed without inspection. And keep in mind, I took care of the other guy that came to me. I was like, look, he told me I could have the deal, and I'm like, look, what do you want to do? Like, if you give it to me, I'll pay for the appraisal for you. I'll reimburse you since you already paid for it. So I would never take someone's deal. I would never do that. But he offered it to me, and then the wholesaler told me that he wants to give it to me, and I was like, okay. So I bought the deal. Make a long story short, spoke to a realtor, and the realtor basically told us there's no way this thing is worth $550,000. It's worth significantly less. We found out there's foundation. We found out there was issues with the property. Basically, we lost money in the deal. We thought the property was worth a lot more due to the appraisal. And so basically what I'm getting at is maybe you would have made that 200 grand, but nothing's guaranteed. So maybe it was a blessing in disguise that you didn't do that deal because you never know in real estate. Like I bought a house in Austin, Texas. I thought it was 2 years ago. Bought it cash. Make a long story short, I thought I had someone told me, oh yeah, we have an iBuyer that's gonna buy the property. And there's no seasoning. I'm like, great. Let's do it. But we can't wholesale, we gotta close cash. I was like, fine, let's go. Closed it. The guy comes to me, sorry, there's seasoning, and that deal was didn't make money on that deal. Was counting the money, thinking we were going to make all this money, and it didn't happen. So I've been in your shoes multiple times and actually lost money. So I think you're in better shape because you didn't lose money on that deal. Just probably wasted a lot of time, I'm sure. So going back to it, got a little off topic. That's what we're doing. This gator gapping series, right? That we're doing. I see some lenders, they're promoting that they're partnering with other brokers, which I think is cool. I'm not knocking it, but the only flaw I see is that the broker charging, a percentage of like, well, I'm hearing 10%. And to me, that's a lot. And instead of having to rely on a broker, I feel that why not give you the fishing pole? Why not teach you how to fish for, that salmon, that trout, and you could just fend for yourself. You don't need to rely on me or anybody else. And in the long run, it's better for you, right? So that's what we're doing. The gator gapping is basically something, and actually, this is not the blog I wanted to show you. I want to go back to this one right here. Okay, it's on the screen, right? So basically, this is what I wanted to go over. Unlock 100% financing using us. We have multiple resources. We have our own capital. We have other capital, other investors, institutional, blending it all together. And on top of that, we want to help you with financial management, building your business credit, getting business credit cards, unsecured business lines of credit, showing you how to use that. Not just now you get it, and then we want to help you manage that. Make sure that you're being responsible, because there's always a risk, and the whole idea is you want to mitigate risk, right? So and we're gonna have guests come on here. We're gonna have a series like that. This is my goal. So, anyways, I wanted to just be real brief. It's been a really weird week. Like I said, I had a friend pass. Definitely enjoy yourself with your loved ones. Don't take life for granted. I had another death in the family, young someone, and you just never know. So enjoy your loved ones, enjoy yourself, count your blessings, because you just never know. And that's kind of what happened to me. It was kind of a shock on Easter Sunday. Had the viewing yesterday, funeral today. That's why it had to drive like an hour away. It's really sad. But it got me thinking about life is precious, and I want to add more value. I want to help more people. Yeah, thank you, Anthony. Yeah, it's crazy. Someone I grew up with, and it's saw their family. It's crazy. It's really sad. And it's tough. But here I am. I made a commitment. I wanted to be here. I wanted to be here and put a smile on my face and be there. And that's the goal. So, anyways, I hope, Anthony, thank you for participating. I really appreciate you. Like I said, we're having these lives every Friday at 4 p.m. I may just put it every Friday, and then the live would just be whatever I'm on. They do that because I've not been on time since, I think, maybe once I was on time, and maybe I was a few minutes late. I'm on Brazilian time, maybe. My wife's Brazilian, and it's like, you have a party, you tell the Brazilians, oh, yeah, it's at 6 o'clock. Meanwhile, it's at 9 o'clock, because if you tell me at 6 o'clock, they're going to arrive at 9 o'clock anyway. So you tell, so yeah, I guess I'm Brazilian time, right? Just so anyways, I thank you for joining. Thank you. It means a lot to me. Thank you. I appreciate you a lot. Let's definitely chat. So if you ever want to chat, by the way, just go to the website. You need to book a call. Let's say you want to submit a loan scenario, right? Really cool, right? Let's say you have a deal, fix and flip, desire leverage. You can put 100% if you want. Doesn't mean you're going to get 100%. But we'll look at the deal, and we'll go over what I like, the type of deals we like to do our own in-house 100%. Keep in mind, like, I may tell you, hey, we'll give you a up to 90%, and we'll help you find another investor. Or, we usually give like two options. We're like, okay, this is your standard, what your rate looks like and points. And then this is your option with a perk. And this is what's going to look like. And you'll see the economics of everything. And it's pretty simple. So anyways, let me get back to what I wanted to go to is book a call right here. Boom. You could choose who you want to speak with, right? So you just choose me, boom, and you get my calendar. So let's definitely chat, Anthony. All right. And I'm not gonna hold it to you the right way. It's all good. I was super. Oh man, it's. I'm just happy it's the weekend right now. And it was crazy. I'm sitting here and the house shook. I don't know if it was an earthquake or that was just the wind knocking into the house and things. Something it's weird. I was like, whoa. And I was driving. I was on driving down the Colts Neck, and I was on the phone with my friend, and then I got disconnected, and I called it back. There was an earthquake. I thought he was like, I'm like an earthquake. And then all of a sudden, like I'm hearing it's all over the state. I'm like, and my wife's like, I haven't heard there's an earthquake. I'm like, oh my God. So here I am sitting here, and maybe there's another earthquake. I don't know, but that was weird. So anyway, yeah, we lend in California. We do. Yeah, we lend in most states. Right now, we used to lend in Arizona and Nevada. We may pick up and start lending there again. The only thing is we need to get licensed. So I'm working on getting my license. I kind of put that in the back burner for some time, and I got to get it so we could pick right back up and start lending there again. But yeah, we lend in California. There's like North and South Dakota seems like the states that no one wants to lend in due to there's like restrictions and different. I don't really know the reason why, but I know California. There's every state has their own licensing requirements. So, you're I guess to Georgia now. Oh, nice. We lend in Georgia. Actually, we have some. Oh, we got some loans requests in Atlanta. Actually, well, I remember I spoke to someone the other day, and we lend in Georgia. I'm just thinking of something recent. I just had a conversation with someone. Might have been yesterday that he's buying deals in Atlanta. But no, I used to go. I like. We lend in Georgia. We like it. Like certain states like we lend nationwide. But when it comes to like gap funding, if it's our own in-house monies, am I comfortable in lending in California? I may say like institutional, yes. Gap funding, maybe. It really depends on where it is. Like for me, to give you an idea for gap funding, I like to like the small projects in and out, like a small renovation budget, buy it, get it out in less than 6 months. I know it's a lot. There's a higher price point in California, but what's interesting, Anthony, is that in California is 50 basis points cheaper than the rest of the nation. So if you're at, let's say, 12% in New Jersey, you're at 11.5 in California. So keep in mind, 50 basis points cheaper. I don't know the reason why. Actually, I think I knew it before, but I kind of like I think I could find out. I forget. It's definitely an interesting one, but that's something that that keep in mind, Anthony, is that you definitely if you're flipping in Cali, you're gonna have cheaper rates, 50 basis points cheaper. So, anyways, any other stuff? Because I think I'm gonna wrap up very soon. You like that 50 points? Yep. Yeah. Yeah. So anyway, Anthony, thank you so much for joining us. I'm gonna wrap it up. So anyway, please like, share this video, and keep in mind next week we should be on time, and I want to go way more into it. And this is gonna be a series, so I'll keep you posted on what we're gonna be talking about next week, and then maybe Gator, it may be Institute, it may be business like credit, something. But I want to basically try to simplify things. And I like this engagement. This is really nice. So, Anthony, thank you so much. Really appreciate you. Everybody, thanks for watching. And We'll see you next week. I hope everybody has a amazing weekend. Take care now.